We're big fans of the access fee pilot. We think that the access fees that have been introduced to the market were introduced in the early part of this century, and what it was a result of a couple of upstart marketplaces, ECNs as we called them back in the day, offered a subsidy to liquidity providers to post orders on their markets rather than other markets. That created sort of a game theory type of event where venue 1 paid 2 mils for liquidity to be posted, venue 2 paid 3, 4, and it escalated. And at some point in 2005, 2006, as Reg NMS was being finalized, the regulators realized it was getting out of control. Those costs were getting overly burdensome for the industry, so they decided to cap them. They capped them at the easiest point, which was effectively where most of those markets had gotten to, right around that 30 mil mark, because it was less contentious, it wasn't a fight. But it wasn't capped at a level that was optimal or that was based on any data or science around what is the right level of subsidy for liquidity provision. So what the SEC is now trying to do is figure out what is the right subsidy for markets for liquidity providers, particularly on overly liquid stocks. Why are we paying people to provide liquidity on a stock that is trading like water? And as a result, intermediary firms are getting in the way of natural investors meeting with one another. So we think that the pilot study is going to reduce some of this excessive intermediation. It may reduce the volume on stocks, but we don't think it's going to increase the cost of actually building or unwinding large positions. Overall, we think it's a much cleaner market. We're all in favor of it. I definitely think that this will make markets cleaner. I think it'll make them less complicated. I think instead of having 12 lit venues in the US right now and growing, we'll see the trading consolidate to 4 or 5 venues. Right now we have 30-ish dark pools. I think that you'll see some of those are being run purely for dealer economic reasons, not for size improvement or for price improvement. And I think those dark pools may disappear. They're expensive to run, and if you can get better pricing elsewhere, you don't need to run them anymore. So we'll have fewer venues, it'll be easier to trade, it'll make more sense. There'll still be plenty of competition, plenty of ability for people to innovate. There'll just be less fragmentation, less needless fragmentation.